everyone, lead trader with StocksToTrade, Tim Bohen. Welcome back to the channel. Got Rob Booker here again. Nice to see you, Rob. So many of you know, I don't do it a ton on YouTube, but if you follow me on social media, you know that I like to have a good time, kind of antagonizing what we call front side short sellers, okay? Especially when we're talking these big moving stocks of the day. You've seen my memes. I'm decent at memes. I'm not great, but I post a lot of memes. I like to pick on these people. Now, one thing I will say is I was a short seller for about 10 years, and I recognized a market shift in 2015, but I've talked about that a million times. But what I want to talk about is the fact that I believe that short selling is one of the best strategies out there, especially when you're talking about these crappy penny stocks that all spike and fail. So contrary to the memes, contrary to the sarcasm, I want to bring in Rob and talk about how to short sell the right way. Okay?
All right, so man, I love the and we could beep that out or whatever. And we said we're going to do a completely off-the-cuff, unpracticed, there's nothing for sale here. Nobody's got any. We're going to have just an honest conversation about short selling because we've both got two sides of these opinions, and I'm going to kick this off, and I'm going to like agree with you. I have watched traders short, low float, high volume stocks and get their butt kicked.
Sure.
And hold on to those, and as they say, the loss is infinite.
Yes.
Okay. Like I haven't ever seen a stock go to infinity, but I have seen a stock go to zero. So.
And I've seen people have their account. I've seen people actually owe their brokers money,
right?
Because they're trading on leverage.
So with that said, that's a fair warning, and I agree with that. And then at the same time, and we're friends here, so I'm going to let you know when I see those memes, I want to jump out of my skin. So I trade every day. It's not a service, it's not a thing, it's not a class, it's nothing. It's me and about 30 friends, Diego and Tom and Caleb, and all we do is short. Like I don't buy stocks anymore. And my thing was, I love the way you trade. I love your VWAP holds. I love all of it. But what I found is I was getting into these and they would spike. And if I had to walk away or if I had to take a break, those mother things would drop back low. And when
especially volatility halt and then drop like a stone.
When you and your crew are done buying those stocks in a lot of cases will crater. And I just said, this is like I just all of a sudden had this realization after 21 years of trading. I said, I need to switch directions. And so I started short selling. And I got to tell you, man, if all of you out there want to buy him on the way up with him and short him on the way down
that's
with me,
the way
that's
to go.
Great.
That's ultimate.
So
memes aside, that's the way, like, and listen, be agnostic. Recognize price action.
Yeah. Like, let's take like even low float, high volume stocks. CXAI goes from $2 one day to $69 overnight, and then
24 hours,
and then it crashes completely. And so, don't short that stock. Part A, don't short that stock. Let it have its day. Every dog has its day. Mm-hmm. B, you know how you do the VWAP hold, and it holds above the VWAP? Just look on every. Your volume of StocksToTrade stuff is amazing. It's the opposite in reverse.
Same pattern. Flip it upside down.
When CXAI came back down, we hammered the fudge out of that. And EDTX and PRFX and all of these companies that have these, they halt. And if a stock, once again, I get so excited about this. I can't, this makes me so excited. When they halt, those are even the more dangerous stocks to short while they're halting. Because a halt is basically an advertisement to buy the stock. And then when that thing is done halting for the day, that piece of garbage, whatever company. So I imagine it's a bunch of executives sitting around. They got a low float company and they're like, hey guys, how's the product?
We talk about playing the game.
Yeah, right?
That's what I, yep.
And those company execs are like, well, the products aren't very good. How are our customers doing? Well, they're not very happy. Well, how's their stock price? Not very good. I got an idea. Let's put a press release out. And what happens?
In a hot sector.
In a hot sector. Or they're not even, they make toilets and they go,
but it's an AI enhanced toilet. Yeah.
And the next thing you know, this company from nowhere spikes. And you gave everybody the tools. You're the first person. I remember going to see you at a conference, and I remember you opened my eyes. You opened my eyes to this. Find the right stock, get in, and get GTFO. Yeah. That works. But it's the other half of that. So they put out this press release, like, give me a common scenario. They put out a press release, and they say, we've now enhanced our toilets with artificial intelligence or whatever they say, and then it just pops.
Yep.
And it halts, and I mean we're cool though, like right? It then drops, right? It just goes back usually right to where it goes. What would it take for a stock like that to keep going?
Well, I mean, the biggest thing is that to keep them alive is to have actually like some real like future for these companies, okay?
Right?
And that's I think the biggest revelation that people, I think this is that whole long short idea that people trip up. It's like, listen, I don't believe in any of these stocks. You've heard me talk about the life cycle, the penny stock life cycle. The penny stock life cycle is a perfect pyramid, okay? It goes straight up and it goes all the way back to where it was. Now, that may be one day, that may be 3 days, it may be 3 months. The ones that stay up and hang around are the ones that continue to play the game and put out press releases constantly and hype themselves up. But the simple fact is that 99% of these are incompetent. They're creating a move to create what we call a liquidity event, okay? They drop that AI-enhanced toilet. It brings in 100x volume, and all the cokehead CEOs and executives and insiders are like, hey, buddy, they tell everybody that their friends were dropping a PR, start selling.
Yeah, and we've got our dilution, we've got our registration.
We got an ATM ready, yeah.
And what that means is, and I hate to be, we're kind of crass about this, but I want to give you some credit here. I've heard you say 1 trillion times, I don't want to hear that anybody held the stock overnight.
Yep.
I don't want to hear that if this goes into a loss, I don't want to hear that you're bag holding.
Yep.
You're equally critical of bag holders on either side.
Yep.
So here's what happens. So these company executives, they have everything ahead of time. I know this sounds crass, and I'm not mentioning any company specifically. Allegedly. So they have these registration filings ready to go, where they could issue more shares. So if you and I start a company, and we kick it off, and it's got 300,000 shares on the float. There's only 300,000 shares available for trading. And on a day, we issue our press release about our smart toilet, and it's got wheels.
Yep.
I don't know. And we're so excited about it. The stock goes from 67 cents to $3.67, and it's just zooming. $4.67, and it halts. Why does it halt?
Volatility. Yep.
So
there's
NASDAQ
rules.
will literally shut the stock down, and then they announce that they halted it, which then it gets out on Twitter, and everybody takes it. Now it's at $10 a share, and this has happened.
Oh yeah,
$20 a share, $30 a share, and now we're all sitting around. We go, let's take that SEC filing registration, and let's issue 1 million more shares to the public at $30.
Yep.
We're going to raise $30 million. You know what? You get a bonus. You get a bonus. It's like Oprah walking around the office. You get a bonus. And all of a sudden, they just tripled the number of shares outstanding, and the stock price drops by 30%. It's
and then fades for days and days and days afterwards.
Yeah.
Because now there is no more, two things. There's no more press releases because they made their money.
Yeah.
Now there's fading volume, and there's no more hype, and everyone knows they diluted. So it's like, well, everyone, once you understand this life cycle, you know it's all over. So
can I ask you, can I lightning round you?
Sure.
All right. So people say that shorting stocks is dangerous.
100%. Yep.
Okay. Right. All
trade.
trading
Listen,
is
anything like I've often talked about, like when people talk about the high failure rate of trading. I mean, look at the high failure rate of starting a business. Okay, but good luck getting truly wealthy without either trading or starting a business. Okay, there's a lot of risk, but the rewards are there.
So what would a stock trader who's going to do it the wrong way, how would they go about losing money as a short seller?
Well, the biggest thing you would do is, I think, in my opinion, would be shorting at or around the market open, okay? Because that is your peak apex of mania, okay?
Right.
Like if you're shorting, I don't care what it is.
Fair enough.
If you're shorting anything right at the market open, man. Now listen, a lot of stocks collapse at the open, but think of that, the reason, the bell ringing and especially like Monday mornings, everyone wants in. I think that's one of the biggest things that's going to screw you up.
So it's funny you say that because
the same stock at 9:30 is completely different at 2:30, man.
Well, also, if I'm short a stock at the open, I was already short before the open.
Yep.
And then you ride it into the open, and then it really gets bad. But then otherwise, you're right. Let it go up all day long. Let it even go up. If it closes near the high of the day, don't touch it.
Yep.
Have you ever seen a stock drop after hours too?
God, yeah. Again, a significant majority of the offerings are after hours.
Yeah.
Now, but see what's great, and listen, I was a short seller for 10 years, but when you let that morning rush, what I love about that first initial move, typically these stocks, the biggest candle is going to be the first candle of the day.
Yeah.
And what's great about that is it gives you an area to risk off of.
Right.
Because when we talk about that VWAP hold pattern, my number one afternoon long pattern, the VWAP fail is the same pattern. And what's great about these big runners is you have a great spot to risk off of. Because listen, if this stock goes from 1 to 3, trickles lower, breaks VWAP at 250,
Yep.
you enter it there, and it goes to like 225. And if it goes back to 3 and you're still short, well, you deserve all the pain and despair and poverty and homelessness, and drug addiction and pain and you know,
Right,
because that. But what I love about that, and I said this for years, when I was that short seller, like I knew, like if this thing's headed towards high a day, I'm sitting there and I'm like, well, you're doing this to yourself,
Yeah.
man. You're choosing to stay in this stock right now that is no longer as short.
Yeah.
So that, especially, I think, as contrary as it sounds, if you struggle with discipline, it's a great way to be disciplined. Because, man, if you stay after that high a day, it's going to get ugly. It's going to get bad.
So I think, I mean, if I might be so bold as to say, when I turned to shorting stocks, almost exclusively, I became better at buying stocks every once in a while.
100%.
And because you came from a background of shorting stocks, you're better at buying stocks.
100%.
I think it's wild. I think it does make you, when you can see it from the other perspective, it makes you better at either side.
100%. Like I used to, that first decade of my trading career, it didn't even like compute to go long. Like I just couldn't understand it. I'm like, people are buying penny stocks. I don't understand it.
Yeah.
So I think that is so important, no matter what your strategy is, to understand both sides of that trade.
I'm gonna be self-deprecating for a minute because I love the way you trade. The only way I buy stocks when I buy them is like you. And so what I'll do now every once in a while is I'll see your morning, stock of the day, pre-market prep. And for whatever reason, I'm just so bad at executing on it. I know the method, I know it works, and so what I just did is I stopped worrying about whether I was bad at it. I just stopped doing it.
Right.
And I appreciate it, and I watch it, and I get so jealous. I'm like, man, all these people making money, but I just have to wait it out. And so I just wait to play my game.
Yep.
So I just kind of play the game that I'm good at. And I think either way we slice it, we really should just be doing this. We should just actually be doing this every day.
Fair enough. Now, what do you think? My question with you is, okay, so people are probably very interested now. Okay, now there's a lot of roadblocks to shorting, borrows, proper brokers, et cetera, like that.
Yeah.
So, okay, Joe or Jane out there wants to short a stock tomorrow. How do I get started?
So there is a pernicious. Okay, you aside. That's it. You're the only exception. There is a pernicious, and I think vile, and I'm not even joking around. It makes me mad. There's the vile, pernicious, disgusting, whatever it is, people who lost money shorting stocks or who are jealous of the millionaires who short stocks. If you look at the biggest millionaires that learned how to trade from Tim Sykes, Tim Grittani and Jack Kellogg combined for $30 million in profits, they're short sellers.
Yep.
So there is a pernicious rumor of people who are jealous of sometimes people who are successful. And they spread it that it's dangerous, and then they follow it up with that it's difficult. Here's how to short a stock instead of buying it. You borrow it, you short it, you wait for it to drop, and you close. You simply press the sell button before the buy button. You don't need any special permissions from your broker or your mom or Tim Bohen. You don't need any special permissions. You don't need a certain account size. They don't care about the pattern day trader rule. You just take 1 or 2 trades a week.
Yep.
And honestly, that's what I do. I now am over the pattern day trader rule. I target $500,000, $700,000 a day. I'm not trying to make even $1 million a year, but that number for me, being consistent and repeatable, it changed my life as a trader. It just changed my life. So yeah, I'll give a guide.
Cool.
It's not necessarily more difficult than anything else.
Because where we totally agree, that I think that, one of the things that and I know I've said it several times, but that 10 years of 95% short selling and not being able to understand how to go long, what happened was that 2015 period was a year of a lot of epic short squeezes. And I got stuck in a lot of them, okay? A lot of pain and suffering, okay? And that was I'm like, well, wait a minute. okay, it's kind of the same recipe here. It's this big, this low float stock that's a big gainer, but the difference is this guy's been consolidating at the highs, and I'm not stopping out, and it's ripping to the upside. So if I learn to recognize that on the long side, and vice versa, it's the exact same pattern. That big gainer that can't get above VWAP and fades late day, and it's like, okay, we know the signs, we know how to recognize this, and it creates, in my opinion, those afternoon trades are the highest probability setups for anybody.
Dude, man, if we got, like, this is never gonna happen, but if we got in the same room every day, and you guided me through the process of watching those go up, I would be 10 times better at shorting the stocks on the way back down. I just love this. I love this conversation. I know we've gone on for a long time, but I love the subscribers to this channel. I love the people that you work with. I love the way that you approach this subject. I love the fact that you're agnostic about, if you can make money doing something, go do it.
Yep.
But the most important thing you say to everybody is, don't hold on to your losing trades.
Yes.
Just don't hold on to them.
And that's it. I mean, that's where, and kind of wrapping it up, that's where, again, the memes and the stuff that's mocking people. Like, listen, if you're short something and you're down, 30, 40, 50%, and you're holding it, I'm sorry, you're going to get memed to death, okay? Because you deserve to get memed to death.
Right. What I like is your memes come out while the stock is rising. My memes come out when it's falling. It's like by the time that I'm ready to short it, you guys are so long.
They're gone. It's over.
You're so out of that stock already. So.
And thanks again, Rob.
Hey, man, thanks so much.
So.